really started to slow in late 2016, at least what the company had publicly disclosed. And so if they looked for if the government was looking for documents in July of 2017 around sales and revenue recognition, it just looks a little fishy. And then, of course, we know that they've had 3 CFOs between 2016 and 2017. We've got this executive shift that's happening on January 1st. So there's a lot of questions, and analysts just say, look, there's just a lot of overhang here right now, and it's really hard even to sort of look through some of this to try to make projections to the future when, as you point out, Ryan, the fundamentals also make this a challenging story.
Yeah, when you start to slow down, maybe there's an extra incentive to keep that momentum going, as Bill George said on our network earlier today. Courtney Reagan, thank you very much. Appreciate that. All right, well, despite those headlines, McDonald's and Under Armour, the macro markets are on pace for a record close. Even the Dow at a new record, Apple leading the charge, despite some recent data from TD Ameritrade that investors have been overall net sellers of Apple for 7 months in a row. Speaking of TD Ameritrade, let's bring in JJ Kinahan, Chief Market Strategist at said firm. JJ, good to see you. Good to see you. All right, so you guys have this investor movement index, the IMX, as you call it. You track what your retail clients are buying, what they are selling, what millennials are buying, what they are selling. People are selling Apple?
People are selling Apple, and I want to be careful about how we set that. It's still the number one held stock at our firm. So people have been selling Apple, as you said, 7 months in a row. I think it's been the most surprising thing we've seen this year in this, because it does measure how people actually trade. So what it tells me is every time there's any kind of bad news on the tariff front, I think our clients synthetically play that through Apple. We were at a conference this week. We had 1,200 clients, and that was a theme that we were talking to them about. They're like, okay, a lot of their suppliers could be affected. I'm long Apple, but when I get nervous, I want to cut back on my holdings of Apple a little bit. The other theme that's really been surprising is that they've been buyers of fixed income, but the duration has been 6 months or less, telling me there continues to be this demand for stocks, maybe not at this level. It still makes them a little bit nervous. They're parking cash, waiting to move in when stocks sell off a bit.
Keith, Apple, it's up 63% year to date. It's the best performing component of the Dow. I mean, does it make sense to be seeing some profit taking or some selling in this name?
Yeah, of course it does. I mean, when you take a look at when they did the the 7-for-1 split a few years ago, which would have put them on a trajectory to make it $1,000 stock before they did that, and people say, well, they'll never get back there. It's gotten back there and then some in spades. And I think what JJ's also alerting us to, or illuminating for us as well, is that a lot of the retail investors, I know several people who've held Apple for 15 or 20 years, and I would imagine, I dare say, that's a lot of your clients that are in there, myself included, by the way, JJ.
Glad to hear that.
Yes,
thanks.
You're welcome. You're welcome anytime. So when you have that kind of cost basis, and if you're a little bit unsure about the macro environment, especially with a company like Apple that is impacted by what goes on in China, then why not take some money off the table and start playing with house money, start playing with TD's money effectively at that point in time.
Well, it's interesting, JJ, what they're buying as well. And we need an acronym for everything. What are you going to call it? MAD? M-A-A-D? You got Microsoft.
I think that's taken.
You got, it might be taken. We've got him, Jim Cramer might have that. You got, look at that, Amazon, Disney, Microsoft, and AT&T. With the exception of AT&T, these are names, particularly Microsoft and Amazon, that have gotten bought for so long. Do you worry at all, JJ, that everybody's buying the same stuff?
Well, I don't necessarily. Disney's been a buy 5 months in a row, as Apple's been a sale 7 months in a row. I think it's also a little bit, talking about Disney and AT&T particularly, I think it might be a comment on the streaming wars that are sort of coming up also, in terms of that being. Netflix, by the way, was a net sell. The other thing about AT&T, let's not forget, people are still searching for return, and so they're also perhaps, rather than just parking their money in the fixed income, saying, why don't I buy a blue chip stock, try and get a nice yield, and at the same time have a nice chance for a capital gain, which AT&T has actually given them. Microsoft, had a little bit of a sell-off. We saw clients come right back in during last month, if you remember that. So again, a lot of those factors play into this.
Quickly, JJ, what millennials bought really got my attention, because all of these names are basically ingestible substances, and some of them that have been under incredible scrutiny given the whole vaping crisis.
So they continue to like the cannabis-related stocks. One thing I would say on that, don't forget, this could be a long-term play. And as we go state by state, if you have a long-term time horizon, that might not be a bad thing to think about. Altria was a little bit surprising to me, especially coming from our millennial clients overall. I don't know what to make of that. And Yeah.
Probably the jewel. I think that was your point, was the juuling.
Yeah.
The vaping.
Right, exactly. And Starbucks makes a lot of sense also. But again, it is kind of interesting to see people adjust their cash, even, although I may say I'm going to be green and all that, adjusting the places where they can make money.
They're getting up on coffee, down on cannabis, and
down on it,
taking it in the middle with vaping.
Last quick thing, you were talking about acronyms. The former FANG stocks. Facebook is stale, Apple is stale, Netflix is stale.
JJ, real pleasure.
Always
Thank
a pleasure.
you.
Thanks, guys.
All right, we had a long way to go on deck. An interview you cannot afford to miss. Uber CEO speaking with Deirdre Bosa immediately after their results hit the tape. Will it be another, Morgan, multi-billion-dollar loss?
Well, we will see, and we'll bring you through that process as we get those numbers. After the break, though, we're going to speak with the CEO of healthcare giant Kaiser Permanente about Elizabeth Warren's Medicare for All proposal and all the big healthcare issues to watch in the 2020 race. Stay with us.
It's another Monday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
This is a live message from the Survivalist Network. There are reports of an impending zombie apocalypse reaching London. But don't panic. Our intel shows that for £199 a month with 0% APR representative, you can locally access the Toyota Hilux Invincible, the only vehicle with the build strength to withstand savage hordes of the undead. Once inside your Toyota Hilux, stay on this frequency for updates. You'll be fine.
0% APR representative on new sales of Hilux Invincible over 42 months. £199 per month. Customer deposit of £9,701 when financed through Access Toyota by 16th of December 2019. £12,525 optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
15-10-5. Touchdown!
Tonight, TuneIn has your Monday night NFL football with the Dallas Cowboys at the New York Giants. Kickoff at 8:15 p.m. Eastern.
At the 5 on the hash mark, running into the end zone. It is a touchdown. He gets the high snap. He rolls out of the pocket. Throws a short pass across the way. It's caught by Albert Wilson at the pylon. He goes into the end zone. Touchdown.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
All right, welcome back to Closing Bell. We are on pace for record closing highs on the Dow, the S&P, and the NASDAQ. And if you're counting at home, the number to watch to hit that record is 27,359. We close anywhere above that, and you put a stamp on it with a new record. All right, that is the macro. Let's now get micro and dive into single stocks, shall we? Shares of Ferrari, Afuoco on fire today. Earnings and revenue beating the street. Ferrari also raised its 2019 outlook, citing strong sales of the Portofino and the 812 Superfast models. I heard Morgan Robert Frank mention that Ferrari's profit margin per car is 34%.
Isn't that incredible?
On a multi-$100,000 car, that explains that stock today.
Yeah, it's almost as incredible as your Italian accent just now.
Grazie.
The Wall Street Journal editorial board is out with an op-ed criticizing presidential candidate Elizabeth Warren's Medicare for All proposal, calling it a, quote, fantasy plan. Joining us from the CNBC At Work conference in San Francisco is Bernard J. Tyson, Chairman and CEO of Kaiser Permanente. Thanks for being with us today. I think that's really where we have to start. All the discussions around Medicare for All, how you, the CEO of one of the largest healthcare systems in the country, is thinking about that.
Hi, good afternoon. Hope you're doing well. You know, we have stated our position over the years. We do believe in universal access for everyone. So we're definitely on the same page that we believe strongly that given the way the American healthcare system works, that you have to have coverage to what I call get to the front door of the American healthcare system. We believe in universal access. We don't think that Medicare for All is the solution that's going to solve the problems that everyone is very concerned about, which is the affordability of care. We will be spending the next 10 or 15 years, once again, focused on the coverage side of the healthcare landscape. And I would argue that's not where the savings are going to come from. That's not where the affordability agenda should have its time and attention focused on. It should be on the delivery of care itself. And so you'll end up disrupting, over 300 million Americans, putting them into a new coverage system that is questionable at best.
So I wonder how you're thinking about that at Kaiser, especially given the fact, we talk so much about CEO uncertainty, business uncertainty right now because of trade wars and softening global economic growth, et cetera. But the presidential election of 2020, I would imagine there's a lot of uncertainty for healthcare there, too. So how are you approaching the disruption or the fixing of healthcare at Kaiser?
Well, we are one of the unique organizations in the country when it comes to healthcare because we're designed and we're organized where we provide both the coverage and the care, number one. Number two, people call us a closed system, even though we do buy services from outside of the four walls of Kaiser Permanente, but we have all of the resources inside of Kaiser Permanente to provide care and coverage to our 12.4 million members around the country. And so we look at it from a very holistic standpoint because of the coverage side and the care side. So on one hand, with the Elizabeth Warren's proposal, she's been pretty clear that she would wipe out, as she described it, organizations like Kaiser Permanente from the coverage side. And I would argue that's not the best way to go. We're a 5-star plan for Medicare and commercial. We work every day in making sure that we provide coverage. We have all kinds of financial assistance programs for our members. We're set up as a not-for-profit, so we run as a not-for-profit organization. So our incentives are all aligned to community benefits and the well-being of the entire community. Well, her strategy would destroy that. On the other hand, we also
Mr. Tyson, it's Brian Sullivan. How many employees do you have, sir?
We have 220,000 employees, and in our Permanente medical groups, we have 27,000 medical physicians.
So what would happen to them?
It's a holistic system. Well, I'm assuming that the majority of them are on the delivery side, and so however she's thinking about constructing the care side of her proposal, they would fit into that category. And then obviously she was talking about that we're going to drive cost out, and we work every day on driving cost out. It's not as easy as it sounds. Rightfully so, we have to pay wages and benefits to our employees, 90% of which in the delivery system are unionized. And so, as she talks about driving down costs, you're not going to just automatically tell employees, professionals, unions that we're going to cut your wages and benefits, 10, 20, 30%, which I wouldn't support because it doesn't match.
We got to go.
Listen,
we're trying to have a 3-hour discussion in a 4-minute interview, and sorry about that, Mr. Tyson. Just quickly, on the employees who are not delivering care, not the doctors and nurses, the employees of Kaiser Permanente who help run the organization out there in Oakland and other areas, what happens to them?
Well, if there's no, if you will, option for selling commercial insurance, which is what she's suggesting, they would have to find jobs elsewhere. Now, there may be new jobs created, obviously, with her program, but we don't have any of those details. And then you have all of the systems and the processes and patient information and everything that would have to be worked through. So there are a lot of details to be worked through that she hasn't given any of those at this time. And probably it's too early for that anyway.
Yeah, long discussion here. I'm sure the first of many debates Bernard J. Tyson of Kaiser Permanente. Sir, it's a real pleasure to have you on CNBC. Thank you very much.
Thank you.
Well, the latest at-work survey from CNBC and SurveyMonkey finds that values matter in the workplace. Why do we say that? Okay, 69% of working Americans say it is, quote, very important to work for a company with clearly stated values. Another 22% say it is somewhat important. And many younger workers have walked the walk as well. Nearly 1 in 3 workers between the ages of 18 and 34 said that they have left a job in the past 5 years because their employer did something that was morally unacceptable to them. Interesting stuff. Would you like to know more? Well, you can. You can check out the full survey results at cnbc.com/work.
All right, well, after the break, Wall Street firm Seaport Global is raising red flags about the housing market. We'll tell you the 2 names they just removed from their buy list next.
Market Movers is sponsored by Payton and Regal.
Hey, NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
Far wing, elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man Fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
Couldn't. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
When Eleanor Longden got to college, she started to hear voices.
And they don't sound like me, so some of them are male, some of them sound quite young, some of them have different accents.
And they would drive her crazy until she started talking back to them.
The voices have ultimately become partners in that healing process.
I'm Guy Raz. Stories of Overcoming. That's next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Welcome back to Closing Bell. It is time now to get the word on the street. Jefferies downgrading Papa John's to neutral with a $58 price target. The firm saying the competitive environment for pizza delivery is getting more difficult. That stock's down 1%.
Meantime, Seaport Global Security is getting cautious on the home builders. The firm downgrading KB Home and Pulte Group to a neutral. Seaport saying that, the sector right now is in a sweet spot from a news flow perspective. Building activity will put pressure on costs. Barclays out with a bullish note. Get this, Morgan.
Oh,
your company,
I noticed.
GE, saying long-term investors may start to look at the stock in part because of increased free cash flow. The firm maintaining its overweight rating and $12 target, which is interesting, Morgan, because last week, JP Morgan Chase doubled down on a bearish stance, and they have an underweight and a $5 target. So 2 really smart analysts have a $12 and $5 target on GE, which is a multi-billion-dollar market cap difference when you have that many shares outstanding.
Yeah, this is very much still a bull-bear debate around this company in the midst of this turnaround. Where do you fall in the debate?
I hate to say it, but I have not liked GE for years. I mean, when it was trading at $20 and people were talking about it thinking it was going higher, and I said it's dead money, it's dead money. Now, unlike some other calls that I've made that turned out to be fairly prescient. But really, I think the bet that you're seeing out of the analysts is, do you believe the turnaround story from Mr. Culp or don't you?
Do you?
I do. They performed well in their two major segments, aviation and healthcare, this past quarter. They lagged a little bit in power. If you believe that he can shed assets, generate more free cash flow out of the business, which is what investors buy, right? You discount the future free cash flow streams of a company, and that's what gives its value, its underlying value in the stock price.
Yeah.
If you believe that Mr. Culp is going in that direction, then you get long here, and I don't think a $5 price target is in the cards for this company.
Yeah, free cash flow is definitely the key here. And I think also the fact that you have things like the long-term care insurance that has been a real issue and a real drain on cash in the past. They put their updated numbers out there. There was an increased charge last year in the earnings, but not as bad as some had feared.
And the reason I mentioned the number of shares is that it's easy just to watch CNBC and look at the price.
Yeah.
Oh, $8, $9. Always know how many shares are outstanding and how much debt there is, because if you have 10 billion shares outstanding and the stock's at $1, you're still got a lot of noise out there, and that's why it's important to know GE's got billions of shares outstanding.
Listen, GE was a monolithic monster that was built over decades, and for it to really streamline its operations and again generate that free cash flow, cash is king always, but especially with a big conglomerate like that, it's going to take a long time to disentangle a lot of those situations. They've also got some fundamental issues in the way they run the corporation as well, as it relates to their employees, pension plans, debt still on the balance sheet. I'm sure Mr. Culp and his lieutenants there are looking to really take advantage of this continued low interest rate environment, probably buy back some of those shares, Brian, increase the price per share, the revenue per share, and the earnings per share, and that will give a nice kick to the stock price as well.
We're going to get more comments throughout the hour. Stick around. All right.
My pleasure.
So we've got, 30 minutes left to go now in your trading day. There are three things really driving the action right now. We are on record close watch for the three major indexes. China trade fears subsiding a bit on some optimistic headlines, but hey, the Dow's only up 74 points right now, well off its highs. We may not close at a record. Stay tuned. Corporate results, they continue to be largely better than expected as we roll through the final stretch of earnings season. And number three, McDonald's. What else? Among the biggest drags on the Dow, CEO Stephen Easterbrook leaving the company, and that's putting it nicely. All right, time now for a CNBC News update. Let's find out what else is moving right now with Sue Herrera. Sue.
Hello, Brian. Hello, everyone. Here's what's happening at this hour. New York City's police commissioner, James O'Neill, is stepping down after 3 years on the job. He will be replaced by Chief of Detectives DeMott Shea. Mayor Bill de Blasio thanked O'Neill for his service. O'Neill says he is leaving to take an unspecified opportunity.
I came into this job with one mission, and that was to fight crime and keep everybody safe. I think that's one mission. There might be two missions, though. And we did it, and we continue to do it.
Too much screen time could lead to learning difficulties in young children. Researchers at Cincinnati's Children's Hospital tested a small group of children between the ages of 3 and 5 years old. They found that those who had more screen time experienced lower expressive language and literacy skills. And a baseball signed by the 1915 world champion Boston Red Sox, which includes the signatures of Babe Ruth, is up for auction at Leland's. The ball contains 28 total signatures. The auction runs for the next 32 days. You are up to date. That's the news update this hour. Guys, I'll send it back downtown to you. Brian?
All right, Sue, thank you very much. All right, coming up, Keith continues to look to cash in on currencies. We're going to get his last chance trade. We're going to reveal that call coming up, 28 minutes to go.
And as we head to break, here's a check on bonds. U.S. Treasury yields ticking higher to start the week with a 10-year bond yielding just under 1.8%. We'll be right back.
The Bond Report is sponsored by PIMCO.
It's another Monday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests.